everybody. Welcome to another episode of gold and silver analysis, market analysis of what's been going on in those two commodities. Have a look at, the fundamentals, some sentiment, where they're likely to be heading next on the charts. And we've also got plenty of other live stream events for you this week. We've got the S&P 500 in just a few hours time, 1 p.m. UK time. That's about 8 a.m. Eastern time. And like I said, check out the site, the channel at TheStopHunter for more scheduled stuff and also new content that I'll be putting in there to help your trading experience and education. So with that, let's get into gold and silver. So what's been happening? Well, it hasn't been that great for gold over the last week since we last met. Down a fair bit, probably because of the dollar being stronger, bonds going up. So, down. Not great really for gold, and there's also some key numbers at play as well. I've noticed in gold it's 2075, 1900, and then under the 1900 it's 1850. We'll see that on the charts at the moment in a moment, but yeah, it's also having that impact on silver range trading. There's opportunity there, but it is quite tricky at the moment. There's a lot of underlying fundamentals at play, creating a reasonably volatile, like I say, tricky trading conditions in the two metals. So let's head into the charts and see what's been going on. We've got the gold chart here, 15-minute. We can see the last week's trading activity. Well, actually from the start of the month, September, and as you can see, it hasn't been all that good. It got to 1980 in terms of price, and now we're looking at the 1930s, 1940s, 1950. Let's just zoom in there to see what's been going on this morning. And it was more of a positive start today. News of China's been buying a lot of gold and still stockpiling a lot of gold. And actually, in terms of results out this morning, there were some good Chinese numbers. I think to watch actually this week in terms of numbers is US CPI out Wednesday. That's 8:30 Eastern time, so that could have a impact on not just gold, but the other stock markets and other markets around the world. So it'd be interesting to see what numbers come out there. But as you can see this morning, like I said, it had been a better start, up to around about those highs there, just over 1950, before starting to pull back to where we are now, 1948, with them bearish daily setup at the moment playing out. And in silver, it's going to be the same sort of story, highly correlated. We can see from the start of the day that same rise, and then pulling back, holding above that pivot line there, which is at 23.39. So let's just have a look at some underlying sentiment. I'll keep these charts running throughout these episodes of gold and silver analysis, just see how they build and change over time. This is the correlation between the two metals, and you can just see there on the right hand side, just breaking down a little bit, not too much still, though you can see highly correlated, 71% correlation. It's a very strong relationship. But you look above there, the silver line, obviously silver, yellow, gold, you can see how they sort of deviated it a little bit. So you can see the same sort of movement there, down in the gold. Let's just zoom in there a bit, down in the gold. It's a bit better, something like that, but not as significant. And then they're starting to follow each other again, starting to tick up. That's a daily chart there. And in terms of the gold silver ratio, I've brought this into a daily chart. Normally it's done a lot longer term than this, but I suppose you could get some ARB type, mean reversal type strategy going on with the gold silver ratio. And you can see where are we at the moment. $83 currently. I'd say it's sort of around hitting that. We got some noise there. Seems to be a consistent sort of level at the moment around there. I would say probably not too much opportunity there at the moment. And let's get into some gold sentiment. Down the bottom there, we've got seasonality. And again, on the left, you see it just dropping off. So we expect some bearishness in there before stabilizing on through and then picking up. So I would call that maybe weak bearish at the moment. And then commitment of traders, that's the large speculators. Expect them to be moving in line with the price of gold, and we can see pretty much doing that. See the down move there correlates nicely with that down move. Slight uptick there, and these results come out every Friday, so you know it is a long-term indicator, so it's difficult to use it, you know, intraday. But you can see the last 4 or 5 days that fall off in the price, not yet reflected in the commitment of traders data. So look out Friday, see where that goes. Does it show that the large speculators still building up their futures long positions, or are they going to cut back in line with what the price action is? So it is a nice tool to gauge the sentiment of the market as a whole. So I like to look at that. At the moment, I've got to say it's pretty neutral there. And the same for silver. What's going on? Same sort of story. Seasonality at the bottom. Maybe a bit more bearish over September, and then sort of getting stronger into December, Christmas period. A bit of a drop and then picking up into the new year. So we call that weak bearish. In terms of the large speculators commitment to traders data, again, we've got this same sort of pattern as gold reflected in there. We've had the pullback. We're going to have to wait and see to Friday to see what's happening there. They had been building up their longer positions. Long positions there, 27k worth. You can see for down from just over 7. So in terms of the large speculators, thinking more bullish there. I suppose you've got at the moment, because of that rise and this coming down, you've got a divergence happening there, which, you know, could create some could be more bearishness actually in the price. So something to watch again when the Friday results come out. But at the moment, I'd call it neutral there. So in terms of sentiment at the moment, if we go to the, you know, both gold and silver, then pretty neutral, weak sort of feel to it. And some other sort of factors we're going to have to watch out for, like I said, that dollar, you know, is it going to strengthen, weaken? That's going to have a big impact on gold over the next period of time. So keep an eye on that. DXY, a good index to track what's going on there with the dollar. In front of you here, you've got longer term gold. Look, has much change from the previous week? Not really. Staying around that sort of 1950 zone. Like I pointed out last week, those 3 highs really didn't want to go past there. That's our 2075, 2080 that we talked about earlier. Now, if it does break it, 2350, the next target, but looking more likely to be heading towards that 1860 zone. After getting through, like we said, that key number, where is he? The 1900 to be a psychological key number around about there. And then after that, it's down to that next Fibonacci line, 61.8%, which is a key Fibonacci number, 1687. And that would then fit in with that, like we've seen, that range that we've seen going back to April of 2020. That's a much longer term look, really. Other variables to look at there, we got bearishness in the indicator. Volume wise, I suppose here we got some sort of build up of positions, but then you've got that scoop out to bigger volume, which happens to be just below that Fibonacci line. So that's the 1850, another probably key number for the market to look at. We mentioned that again as well early in the show. And then after that, a big slip down to the I'll call it probably 2018, 29 levels, 1250, 1300. Not a lot of volume in between. So at the moment, I would call the longer term picture weak bearish, but you've got this range 2075 all the way down to at 1700. So there's still a lot to play for in between. And silver, it's another range trading type of story, really. We had the nice run up in 2020. We've got a couple of highs there. It's been trending weaker, but the momentum, the pressure could be building up inside here for possibility of move in either direction. At the moment, it's unclear. Volume, you can see building up here, building a nose around this 23 1/3 sort of area, and then that arc down to those lows at 16 1/3 as well. Variables that we want to look out for, the fundamentals, especially on silver, over the next few weeks, months. Well, it's been impacted by falling bond prices and increasing the dollar, which is giving it that sort of weak bearish feel. But you know, if there's a change of bond prices start going up, the dollar weakens, maybe something in Ukraine or Taiwan happens. The BRICS, you know, they've been looking at creating their own currency, and you know, if it's backed by gold, that would drive silver up. You know, interest rates, you know, China selling treasuries that, you know, downgrades. There's lots of variables here that can move both gold and silver around. And also remember, I said in the previous show you watched, it's more of an industrial metal these days, silver. Well, I say more of, it is more usable than gold in the industrial sense. So it has that factor as well. Now, the growth of, you know, economies and its use, it's, you know, like in solar and, you know, semiconductors, you know, all that sort of sector as well. So you've got to factor that in. So that, like I said, there's a lot to factor into the price of gold. But at the moment, you know, is it better just to be sort of trading this sort of messy range? Probably. Short term, in and out type positions until there's something more definite to watch. But at the moment, it's sort of a sideways mess around that 61.8% line, just over $23. And then for some reversals in the price action, we've got gold on the daily chart. Remember, I always say you can play around with the dates here on this line break chart. We've got a bearish setup in play at the moment, almost coming in around the 1946-47 zone for that short trade. You know, if you're more aggressive, I use that 4-2 entry, but if you're on like a 4-4, then you might want to wait until sort of 1920 sort of area before going short. But short play set up there on that daily line break chart. And silver, what's going on? It's the opposite. You could have been long already around 22.65. Bit more conservative approach, maybe around about 25 1/3 for that move up. But remember, like I said, that's a daily chart. You know, these things take a long time to play out. So you could, you know, for example, take it down to the 1 hour chart, and again you get a different setup. See, we got, you know, more of a bearish view. You could be looking to sell almost immediately, or down here out early 23s before it moves on down again. So, you know, these are all ideas for you, but what you've got to do is test them thoroughly. Don't just go off what I'm saying here. These are just, like I say, ideas for you to think about. You know, maybe set up your own strategies and trading plans around gold and silver. So then into the Renko charts for gold. This one here, I believe, is $6. That's a medium term sort of picture for gold on the Renko chart. Let's just pull it out a bit. What can we see going on? Like I said, it's not really that much different from last week. Let's just put some Fibonacci's on there. Give us a better roadmap to what's going on. There we go. Do like that double bottom there. That's the beauty of Renko. It does show these reversals very nicely. You got that W, and off it ran. It's very good for spotting support and resistance. And key numbers, let's have a look at the key numbers that we've got going on here at the moment. Got a lot of price action around this Fibonacci line, 38.2%, 1913 area, just above 1900. So that's going to be an important pullback point. Maybe there's some support bringing in to stop that going any further and pinging on back up. All the volume, you can see here, significant volume is at this 1965 area, which is just under that 61.8 Fibonacci line. So again, I think you're probably going to find it struggles to get through there unless some important fundamental news comes out. And then up to that, it's just over 2000, 2067 and 2135 upwise. If it does break that 1900 to the downside, then we've got two numbers to think about, 1876 and 1870. But remember, I did say that 1850 seems to be a key psychological sort of number for gold at the moment. And as you can see, the volume all tails off, so it could be a quick move down to those numbers if it did happen. So that's gold long term. Shorter term, what have we got? So we've got August and September on the chart here. We've got using a $2 block size. Let's just pick the highs and the lows. You've got the low down there in the 21st of August at 1914. The high there just over 2000. And again, if you're a short-term trader, then we'll be looking for downwise 1935 and 1913, and upwise, if you're doing key Fibonacci lines, then we've got the 61.8 at 1972. Then we'll go back to those highs at 2000. In terms of the volume set up there, got this arc in between that high, that sort of shorter term high there, and the base that we could see being put in around that late 1940 area. So at the moment, I can't get really excited about the gold there. Neutral, weak, bearish is my assessment of those Renko charts. We got, just to finish that one off, we just got the indicator starting to turn south as well. Silver set up let's get the big chart, the longer term first. 0.2 is the block size. Let's draw on the Fibonacci's. There we go. What can we take away from that in the longer medium term? So just bouncing from that 61.8 at 23.25. Maybe heading back up to, like I said, that range type play, 38.2% at 25.25. So you've got a couple of dollars in there. You can see it struggled to break up there, and when it did break up there again, it didn't really want to go much further than 26.5, 26.25. Downwise, Fibonacci's 21.8, and then that low at the nice round number of 20. Volume all sitting comfortably in the middle there, around 23.9 to 24. But again, at the moment, similar to gold, I'm going to call it a range bound market at the moment until some of those fundamentals that we've discussed become more obvious, that we can get our teeth into and then get more confident of the trend direction. but looking a bit more messy on the silver front. It's a bit more volatile. Indicator down the bottom, looking weak as well. And short-term wise, actually it's just going to be pretty much the same sort of story. Got a bit of support building here. We got a treble bottom in there, which is encouraging for the shorter term bulls. 23.2, maybe looking to 23.80, 85, and then that 24.2. The shapes of the volume in there as well. Downwise, the point of control around 22.875, and it would be down to those recent lows, 23 and 22 and a third, and then 21 and a half. If it breaks there, you could almost argue that you got some weak sort of head and shoulders type pattern that you would then be aiming for numbers down in this lot, but that's argumentative, that setup there, and also probably negated by that trend coming in like that. You probably more want the trend, or you do want the trend more coming in like that for that reversal pattern to play. So probably not the case, the head and shoulders there, but just an interesting pattern play. And we've got a lot of volume, price action over here, like we said. So the likelihood, probability is the price heading to this 22.87 to 22.30 over the next week if we continue this weak bearish outlook. So that's the charts, the sentiment, the fundamentals all analysed. If we took gold, I call it weak bearish. It hasn't been a great week for gold. The underlying variables, fundamentals driving it also look weak. Silver, a bit messier, a bit more range bound. Some key fundamentals need to shift to get that moving up bullish again this week. CPI numbers Wednesday might be a factor to help it, at least in the short term, in either direction. So watch out for that. Other than like that, I'd call it weak bearish, range bound as well for silver. So there you go. That's the analysis for gold and silver for this week. Join me at 1 o'clock today. That's 8 o'clock Eastern time for my look at the S&P 500 for the week ahead. If I don't see you there, then good luck with your trading. If I do, I look forward to seeing you again and chatting over where the S&P is going next. Anyway, thanks for watching, and I'll speak to you soon.